Please welcome to the stage His Excellency Sheikh Bandar bin Mohammed bin Saoud Al-Thani, Governor of the Qatar Central Bank, and Fatih Karahan, Governor, Central Bank of the Republic of Türkiye, for a conversation with Bloomberg's Joumanna Bercetche.
Hello again, everybody, and welcome back from lunchtime. So I'm really looking forward to this next panel, and their excellencies and myself were having a chat offline, and I said to them, it's really difficult to be a central banker because it's like shorting an option for those of you who are involved in finance in the room. If you're cutting rates, it's because growth is weak and people are losing their jobs, and if you're hiking interest rates, it's because inflation is high and people's incomes are seeing a hit. So whatever you do, people are going to be criticizing. But if you add your monetary policy and price stability mandate to all of the other things that central banks have to think about today, from climate change to artificial intelligence, it really does make for an interesting mix. So throughout the course of this conversation, we're going to talk about some of the macroeconomic challenges, and then we'll switch to perhaps some of the more medium-term challenges, artificial intelligence being one of them. Your Excellency, I'd like to start with you. 2022, 2023, I feel the discussions with central banks have just been dominated by inflation, the inflationary outlook. What started off as a supply shock became more of a demand shock over time. How do you see the global inflationary outlook from here onwards?
Thank you for having me, Joumanna. As you know, in 2023, the inflation has been improved significantly. That due to the improvement in supply chain, as well as the decline in the prices of foods and energy. But from the beginning of 2024 until today, the inflation has been varied from country to another, from geographical area to another. For example, in the United States, the inflation is still high. In the beginning of the year, there was expectation for cutting like three cuts for this year. But now things changed because the numbers of the data that's coming from the economy is changed. So in U.S., the inflation is still high, and the interest rate might stay higher for longer. While in Europe, for example, we can see that the numbers and the data that comes from Europe showing that the inflation is in their trajectory to decline to 2%, which is a better situation than U.S. So we might see earlier cut in interest rate in Europe than in U.S. Any central bank will not move to cut an interest rate unless they are confident enough that the inflation is to its target level. They need more confident data for them to move and cut interest rate.
Yeah, that's certainly the messaging that we're getting from central bankers. Dr. Fatih, let me ask you about Turkey, because the dynamics there are a little bit different. You've got inflation close to 70%, 69%. You just recently upgraded your year-end forecast to 38% from 36%, but that's still very much below where inflation is right now. And people often say that you have to see it to believe it. So what are you doing to manage people's inflation expectations?
Thank you. So the latest reading is 69.8%. And actually in May, because of base effects, it's on track to go up a little further, probably reaching 75% or so. And then we're on the verge of a big decline in inflation in the second half of the year. There's a couple of factors in this. One is there's going to be some favorable base effects, but also the underlying trend of monthly inflation has been coming down because of the tightening that we have done. Now, if you look at market expectations, the markets agree 100% that inflation is going to come down quite a lot. We disagree a little bit on where it's going to end. Our forecast and our target for year end is 38%. But market expectations, being around 44%, and our policy rate being, 50% in simple terms, 64% in compound terms, is actually quite a tight stance. And if you look at, financial conditions, various indicators of market interest rates are quite high, and credit growth, which is a leading indicator of demand conditions, has come down quite a bit. So we think in the second half of the year is going to be really supportive of this inflation, and will be, on track to hit our targets.
So thank you for spelling out how you envisage the inflation profile. Let me just ask you, if you did get an upside surprise in inflation, higher than what you penciled in, would you hesitate to hike interest rates again? I know you've said you'll do whatever it takes.
Yeah. So, great question. Look, you talked about the popularity of central bankers, or actually unpopularity. We're not in the business of being popular. We're in the business of doing our job, which is to get back, inflation back on track, to reach price stability. We've had upside surprises before. This happened in the month of February, in March, when we had the February reading, which was a lot worse than we anticipated, and we reacted strongly. So we're cognizant of the risks, upside risks, and we're ready to act, to do whatever it takes to bring inflation down by the end of this year, in line with our forecast. But it's not just this year. Our longer-term forecast, target is 5%. So our goal is to bring it down to 38% this year, and then 14, and then to single digits, and then thereafter too. So it's a long process, and we remain committed to keep our policy stance tight.
Well, the last time a central banker said whatever it takes, they were successful. So this is version 2. Let me ask you about, Your Excellency, about the sort of the importing of tight monetary policy that Qatar has from the US. Obviously, you have a pegged currency, and you spoke about the Fed and the position that they're in now, that they are hesitant to start cutting rates before they're sure that inflation is on the right path. How does the tightness of the monetary policy that's set by the Fed affect Qatar and the Qatari economy? And would it be a relief for you if they did actually start cutting interest rates?
Yeah. Thank you for this question. As you know, we are pegged to US dollar. And as a central bank, our main duties is to maintain the peak rate. So that's why we are keeping the interest rate high in the state of Qatar. Despite that, the inflation has been declined to a reasonable level. So our job is to maintain the peak rate. Our job is to make sure that we don't see any capital outflow from our market. So we have to manage between having a balance between monetary policy and also maintain growth, as well as protecting the economy from outflow of the capital. Historically, this regime worked very well for the state of Qatar. We are going to keep our currency pegged to US dollar.
Yeah. I heard that earlier from His Excellency Jadran as well on our earlier panel. Let me ask you a question about growth. How important is it to the central bank that keeping rates restrictive doesn't tip the economy into the recession?
Thank you. So if you look at Turkish growth, the growth of Turkish economy, last year, for example, growth was strong, but it was entirely driven by domestic demand. Actually, the contribution of net exports was negative. That means there's a large current account deficit, and that means there's a drain on our international reserves. And so by bringing inflation down to price stability, we'll have healthier growth, more sustainable, maybe at a somewhat lower level than last year, but in the longer term, it will help us grow at a less volatile, more sustainable basis. So we don't see in the longer run a trade-off between the two.
So short term, if it does have an impact, the messaging to the public is going to be long term, the path is still on track.
Yes, we have to bring inflation down. If you ask, anybody in Turkish public, what's their number one concern about the economy? is that the prices are too high and they are growing at a high rate. So our contribution to social welfare, our biggest contribution to social welfare, is going to be by making sure that we go back to price stability.
Well, let's talk about some of the medium-term drivers of inflation. Artificial intelligence, obviously a hot topic here. I'm just curious, maybe if we can start before going into the financial stability aspect, just from a macroeconomic perspective, how you see artificial intelligence impacting medium-term productivity, and if overall you see it as inflationary or disinflationary, because I've heard both arguments.
Okay. Regarding the AI and the relation between AI and the inflation, in the mid-term to long-term, my own belief that the AI will contribute to bring inflation down. Why? Because AI assumed to enhance efficiency and productivity, and also to improve profitability. So that also AI might replace some of the jobs. So the midterm to long term supposed to contribute to bring inflation down, but in the midterm, in the short term, I believe that AI could contribute to increase the inflation a little bit, because a lot of institutions now, they need to invest in hardware, software, this new technology, training, so that might cause the prices to increase a little bit.
How do you think about it from the Turkish economy perspective? Turkey obviously has a huge manufacturing hub. How does the advent of artificial intelligence and its potential implementation have ramifications on the Turkish economy? How are you thinking about the real economy impact?
Thank you. So first, obviously, it depends on adoption. And for adoption, you need a workforce that's agile, that's adept at change. It can be retrained and can use new technologies. That's going to be really key in making sure that we can adapt to this new technology and we can make the best out of it. Now, in terms of the precise impact on productivity, you can make two different cases, honestly. It's clear that the potential is really huge. I mean, we see it, in the news every day. With every new advancement, there's something, fascinating that comes out of it. What exactly the productivity impact is going to be is a little bit uncertain. It could be the thing that's going to keep us growing at the pace that we've grown in the past. But it could be the thing that's going to make the world grow faster. But it's really too early to say, because there's a lot of work ongoing that's trying to figure out what's the best use of this technology in productive uses. So there's a lot of uncertainty.
Yeah, it's still early days. From a financial stability standpoint, I know the central bank also has oversight over the financial system as well. Do you think that the adoption of AI from the financial system could pose any financial stability risks?
Very great question. First of all, we have to understand that AI is not a new topic for financial industry. Financial industry is a data-driven industry, and financial institutions, they used to have predictive models, algorithm technology, for example, trading. But however, with the new AI technology, we assume that this technology, by adopting this technology in the financial institutions, is going to enhance the efficiency, improve customer experience. They will be able to manage their risk better, as well as to better manage their compliance. So is there a risk or not? There is a risk. And any new technology it comes with a risk. So, but the question is, what type of risk? In my point of view, my concern is about the biased data, data privacy, market manipulation, and reliance on AI for decision making, to some extreme cases might affect also financial instability. But the main concern is cyber attack for me. So cyber attack and abusing this technology to attack financial institutions, this is my major concerns. So as a regulator, we have to, first of all, we have to improve our institutional capacity, and we have to hire skilled people to closely monitor these new technologies that have been adopted in the financial institutions. Also, regulation is very important. In the state of Qatar, in Qatar Central Bank, we're going to, in a few weeks, we're going to issue our first guidelines how to adopt AI in financial institutions. That's going to help financial institutions to better adapt AI and mitigate the risk.
Is that a legal framework that you're putting together? Are you working on a legal framework around the adaptation of AI?
We are working at this stage. We are working in the guidelines. These guidelines now, we send it to the financial institutions as a consultation paper. So we're going to see their feedback, and then it's like a framework. Also, it's governed the data. It's governed how to apply the AI, the risk modeling, etc.
Well, Dr. Fatih, what role do you see for central banks in monitoring and assessing the risks associated with AI? You've got a lot on your plate already. Is this just going to add an extra operational burden to you?
So, I mean, the Turkish Central Bank does not have a supervisory role. It's a different agency. So for us, it's not so much a concern about the systemic risk component, but more, of course, we're monitoring the impact. So there's a couple of use cases for us. One is, for example, just making sure we get the right insights from real-time data. AI is great in parsing through complex data and generating insights. And so in that sense, it can help us figure out what's going on in real time. But more for the long term, obviously, there's a question of what the impact is going to be on the real economy. And there, there's two margins. One is through inequality, because the labor market effects are a bit uncertain, but AI has the potential to be a little bit different than the last round of technological innovation. The last round was automation that displaced pretty much middle-income jobs, routine tasks, for example, and led to job polarization. But AI has the potential to displace, as a possibility maybe, we're talking about doctors and lawyers and maybe economists. So it's very different in terms of where in the wage distribution it's going to impact. So the inequality implication can be different. So in that sense, in terms of when we're talking about central bankers, we talk about the natural rate of interest. So inequality is a channel that can affect that. And also productivity growth, which we already talked about. If productivity goes up, obviously then their natural rate goes up. So these are things that we closely keep track of to figure out exactly how AI is going to affect the real economy going forward.
Well, you've inspired a question. I'm going to go back to the beginning, which is a question about the Turkish economy. Since you bring up income inequality, a series of measures were put forward by your Turkish finance minister yesterday, Mr. Sheikh, and I wonder to what extent that package is going to address some of the concerns people have about income inequality in Turkey right now.
So the package, the package that was announced yesterday were a set of spending measures. They're not, they don't have first-order effects on the distribution of income. It's really to help us in our fight against inflation. It's to help us tame domestic demand, which I explained is too high and needs to be moderated. So the Minister of Treasury is coming to our help with the spending package.
Yeah, all working together. Final question to you, Your Excellency. What would you say is the biggest risk on your radar as you think of the outlook in the next couple of years? It doesn't have to be AI. It could be anything that's on your radar. What is keeping you up at night?
Honestly, political instability. We need to see political stability in the regions, in different regions, to see more growth in the economies. We are, as an economist and policymakers in the financial sector, we want to see stability in the regions for the economy to grow.
Yeah, yeah. I think everyone here would echo that sentiment. Your Excellencies, thank you so much for this fascinating conversation. We spoke about a lot of topics. I wish we had more time, but thank you very much for your time.
Thank you.
Thank you.